Today we're going to be seeing how we can trade using 1 minute time frame, how we can use this 1 minute time frame for scalping, and how we can get some good entries even on 1 minute, and how we can keep a stop loss. We are going to be using 1 minute time frame in Banknifty, and also with the help of, along with the 1 minute time frame, we are going to be using the 20 and the 50 EMA. Okay, and before I start this video, I just want to tell this 1 minute, though it looks nice, but it'll be very volatile because each candle will look very big. Now compare this 1 minute to a 5 minute or a 15 minute. We'll just do that. Now the reason I'm telling this is trading in 1 minute will not be easy. It should be attempted by people who are like pretty semi-experienced in the market, and not for someone who's very new and who has just started trading, and they should not be looking at this 1 minute time frame to take any trade. Now on the right side over here of the screen I have the 1 minute, and on the left side I'll put a 5 minute chart. Ideally what we would use for intraday, a 5 minute or a 15 minute, right? See, now the kind of candles that forms in the 1 minute, right, will look very huge compared to the 5 minute, sorry, even here, yeah, 5 minute or the 15 minute candle. So it might look very attractive to buy or sell because of one huge candle. So we are going to see how we can take good entries using 1 minute. The reason I wanted to tell that, like, anybody who's new to the market should never use this 1 minute time frame for any sort of analysis or trading. Probably if somebody is little good with execution and who are little well versed with the market entries exit, they can try and use the 1 minute time frame. Now as I mentioned, we are going to use the 20 and the 50 EMA. Let me add that. I have the 20, 50, the blue line is the 50 EMA. I have the length 50, and obviously coloring is one's choice, and red, I keep the 20 EMA as the red color 20 EMA. Now before we get into this, how this 20 and the 50 EMA works, I'll just explain. Now just assume this is the 50 EMA, the blue line, and this is the 20 EMA, the red line. Okay, now what is a bearish setup based on this EMA says, if the 20 crosses 50 on the downside, right, and say this 50 is here, and it will be like this. When this type of a setup comes where the 20 EMA crosses the 50 EMA on the downside, and the 50 EMA also starts pointing on the downside, then this will be a good bearish setup for shorting. And the same thing on the upper side. Now if you have 50 EMA, sorry, it should be, say now you have a 50 EMA, and then you have the 20 EMA. When the market is coming down, and what happens is, at some point the 20 EMA will cross 50 EMA on the upper side, and the 50 EMA will also start pointing on the upside, right? Let me just change the coloring. So even if the 20 EMA and the 50 EMA starts pointing of the upside, then this is a bullish setup. This is a bullish setup, and this is a bearish setup. Okay, where after this crossover, the price action might come down, and after this crossover on the upside, the price action might go up, right? We'll just remove all this. So we are going to use that logic, and in 1 minute time frame, along with 20 and the 50 EMA, and we'll also see what happens in the sideways market and how we can take a trade. Let's start few examples from the recent price action in Banknifty, Thursday, Friday, and probably Wednesday. See, Friday, what happened in the market is, we had a gap up, we went higher, and then we had a nice slip. Now in this slip, how to take a good entry based on this EMAs and the 1 minute time frame is, see, the best entry on Friday was this, when, see, in 1 minute time frame, right, always mark the swing, the recent swing high and the swing low where the market turned. What is that swing high and swing low is? We'll just see that also. Now say the market is going up, okay, suddenly at one point it reversed. Let me put this in black. Suddenly at one point the market reversed, right, and it fell. Now again the market is coming up, so this previous swing high will always act as resistance. Put a red line here. This previous swing high will always act as resistance. We need to mark that and keep. So when the price comes next time closer to the swing high, right, there's a good chance we might take resistance here and slip or break out. And the same thing if the price is continuously falling, okay, the price is moving like this, we go up, and again when the price is coming down, the previous swing low will act as a support. So we'll have to see whether over here we are getting a bounce or we are going to break this and make a new low. So always have the previous swing high and swing low marked. See, now in 1 minute time frame you will find many swing highs, swing lows. Always look for a position where the market, the price action has turned. Now say Bank Nifty is going up, okay. Even while going up, the Bank Nifty, it won't go in a straight line, right? It will go up, come down, go up, come down, go up, come down. Then finally it will go up and then it will make a big turn on the downside. So this, where the market actually turns, the price action, sorry, not the market, I should refer it as price action. When the price action actually turns and starts coming down, that is a point we mark as a swing high and where we can possibly take resistance. Now using these two, the EMAs and the support and resistance, what I mentioned, on Friday what happened is, see, there was a beautiful gap up, we came, retested. See, here there was nothing much to enter either. Sorry, here, see, in this move and this move I wouldn't have taken entry. There's nothing much like a good setup where you can enter. There was one here, we will come to it later on. But when the second time when the market was coming up, right, we had marked this level because even today we took resistance. See, this was Thursday price action. After this nice fall, we bounced, and exactly over here we took resistance, right? So we had this marked, and exactly over there, the first time we came, took resistance, came down, and second time when it came, it kind of made like this double top, and there was even a nice bearish divergence on RSI, where price was making a higher high and indicator was making a lower low. So we actually took a short here, but in the second green candle, when this green candle came to our entry level, right, we kind of squared off and just waited. So this was a good entry. We could have kept the stop loss as high of this wick as a stop loss. And in 1 minute, how will you see the target, right? It is a 1 minute time frame. We can't keep too many extended target. We can make use of the fib, that is, keep the nearest swing high and the swing low, and the targets will be either 100% or 1.6. A very conservative, a very quick scalper can even exit at 0.68 or 70%. Anything below 61% or 78% you can exit even at 1, or if you can wait and if the price action suggests that you can wait until 1.6 of the Fibonacci retracement. Now, how will you place the Fibonacci retracement is the swing high and the swing low. Now, say assume we shorted over here, okay, we shorted over here and we kept stop loss as high of this wick. Now you want to get the target. So what you do is and if you see the recent swing high and the swing low, this is the swing low, the most recent, and the most recent swing high. So the target exactly got achieved here. We had a bounce from here, conservative targets. See, this itself is a pretty good move for scalping. See, 1 minute time frame, it's all about scalping, right? So 145 points means easily the option premium would have jumped 70 points. So for one lot, you would get about, like, say, 500 or 70 into 25, around 1750 points. That's what it's showing, right? So this is how we can check based. This is how we enter based on the support and resistance. Now, how will you enter based on the using the EMAs, right? So once this gap up, this whole thing got settled down in the morning, we went up, came down. Now we started, since we didn't break this high and make a new high, right? So we waited to see if we get a nice crossover, like say the 20 crossing 50. See here, the 20 crossed 50, and now just because the 20 cross 50, we cannot short. When we will short is when we get this type of a move, that is 20 pointing on the downside, 50 pointing on the downside, and this type of a parallel channel is being formed, right? This is when we can enter. Now say assume in the live market, what happens is, let me, now what I'll do is I'll just do a replay of this so we can see where we can enter and how we can decide on the entry EMAs. So I'm just going to play. See, this is where we see the 20 EMA is about to cross the 50 EMA. We cannot blindly just take a short position. Because of this, we will wait for the parallel channel to start and a retest of the 20 EMA. See, this is a candle where it came to retest the 20 EMA. Sorry. See, this is a candle which came to retest the 20 EMA and then wait for some confirmation to see if the price action follows the parallel channel. See, now this is where we started leaving the 20 EMA price action, and the price 20 EMA is pointing down, 50 EMA is pointing down. Kind of this parallel channel has just started. So we can enter in such place with the best entry is always when we retest the 20 EMA or the 50 EMA, right? So in this case, we can take a short position. Now say, now you entered over here and we keep, I'm a person who is ready to take very short stop loss, re-enter if required, pay brokerage but not lose my capital. Now this is our entry, right? Now how we will keep stop loss is obviously the previous significant high candle where this move came, because this area is where we could not break out, we started coming down. So this will be a good stop loss. And how we can get the target is keep the fib from the most recent low to high. Now when I say most recent, it has to be the most recent. On 1 minute time frame, don't go too back and place it over here and wait for the target. We'll see the most recent. Sometimes it'll be a very small target. In 1 minute time frame, that's all scalping is all about, right? So we keep this as our targets. The first target would be the 70% and the 1%, and then if say we get the extended move, then it is 1.6. So we will keep a conservative target of here, like say about 1:2.5, and just play, see how the price is moving. See, and you can see this channel is building up. You see it is spreading, so you know this is working. Now let me stop this here. See, now you see this, how the 20 and the 50 EMA is spreading and forming this type of a parallel channel, so you know you're good. You can wait until your target, and along with these target, we can also make use of the CPR levels as a target. Now you say your 150, your 61% fib retracement has reached, and you are at a good CPR R1 or S1. So that's another place where you can book profits. It's all about booking quick profits. You miss some profit, it's okay, but we should not lose money, right? So this is one place where the trade could have worked. Now, what will be a trailing stop loss? Now, at some point, now if say somebody is, see, I would exit at when this level hit. Like somebody would want to wait and see if the dip extends or not. But where you can take your trailing stop loss. See, once you have got such a big move, there is no point in sitting. See, you've got such a big move, 170 points, right? This is pretty good in Banknifty. If you can capture 250 points, it is very good. There is no point still sitting with, where is that? there is no point still keeping this stop loss over here and sitting in the trade. Your target is hit, okay, say your target is hit, and a bounce might come or not, we don't know. But there's no point keeping the stop loss and waiting, like telling, okay, my target hit, but this is my stop loss. If stop loss hits, I'll exit. I don't believe in that. If your target hits, exit. Or even before your target, if say your trailing stop loss hits, exit. Now, how you can take a trailing stop loss is, now if a candle closes above the 20 EMA, we will take our trailing stop loss. Now, for example, over here on this candle, you can take trailing stop loss. If somebody had waited even in this candle, we could have taken trailing stop loss because we are closing even above the 50 EMA. So this is where we can take a trailing stop loss, and if you see how much points we covered because of this is about 175 points. We'll look at some examples where even a stop loss gets hit. Now, this is another beautiful example on Thursday when the market started falling. When the market started falling, and see how the EMAs form, right? All this time, and this is a typical sideways market. In this type of market, we don't take any entries when you have the 50 and the 20 moving like this zigzag. It's neither going up, it's neither going down. So basically what happens in the sideways market is you'll have 20 and the 50 moving flat. You won't have this type of parallel channel form. So in that scenario, we will not take any trade. And see, along with this, along with the EMS, how we can couple the price action and take good entries is, see, on this day when this low broke, right? See, the best entry on this day was here. See, we started forming the parallel channel. Once the channel is formed, if we get a retest to the 20 or the 50 MA, we can take an entry. We got a nice retest to the 50 MA, and on this candle, when we again broke the 20 MA, we could have entered with this high itself as the stop loss and obviously our targets. And a better confirmation was when this low broke based on the price action. So it's not that just because this EMA parallel channel is forming, we can blindly short. We'll also have to see the support and resistance based on the price action, because from morning twice we bounced from here, and if you compare it on a 15-minute chart, see, if you compare it on a 5-minute chart, this is where there was good support. So once this broke on the 1-minute time frame, we could have entered and stayed in the trade as long as this EMA is moving down. See, if somebody hadn't entered here, this was a very good retest to enter. Now in 1 minute we got a pullback until the 20 MA. See, after retest, wait for a candle like this where the retest and the price action breaks the 20 MA on the downside. A candle like this to entry, and the same thing over here. Wait for that pullback. Always the price will, even in 1 minute time frame, you will get a pullback and then a down move. So this candle, right, what I'm marking, this was a good entry because you're breaking 20 MA when this panel channel is there on the downside. And if you see the recent low, if you see our target, right, see, obviously even I didn't expect we'll get such a big move. I thought we are going to dip until this point, that is on this day, Thursday, when we fell, and we also had the CPR level R1, and here is where we had taken support. So my target was this, and if you see the recent low and the recent high, the recent significant low was this, high was here, right? So if you see this, we got a nice beautiful target. The target of the scalping, it hit here itself, right? But after that we got such a big point. So in such cases, if you exit here also, it's well and good, and wait for the retest and then re-entry. See, we were able to exit here after seeing this green candle, then waited for this retest, and then when this started breaking down, we re-entered. So in scalping, you have to be pretty quick with your entries and exit. Put out this. Now let's see a place where we could have got confused is something like this. Now see here it almost looked like we are breaking down, we are coming on the downside, but this type of parallel channel didn't form. Now if I hide this price action and do a replay from here, we can see when to avoid taking a trade based on the EMA crossover. Now, so this is how the price is moving. See now, here we might get confused that okay, it's about to cross 20 and 50. Are we going? Can we take an entry? No. When will take an? When will even decide to take an entry on the short side is just increase the screen. See, all this time we won't take any entry. We won't even think of going long or going short. When we will decide to take an entry is when this type of the parallel channel starts forming. When this forms, right, when this type of channel starts forming, then wait for a retest to the 20 MA. Sometimes retest will come or not. If it comes good, wait for a retest and short. And I told you about how to take the targets. So in this type of flat thing, if we get confused and enter, we will know we will not go anywhere. And the same thing when the market turned bullish, if a market turns bullish on the upside, right? See, we got this nice down move, and once over here, when this, what do you say, the 20 cross 50 on the upper side, and even the price action was bullish, and we were coming from a good support. What is a good support? We were kind of making this double bottom, and on this day, there was a very good support over here, 36,000, 38,600, and see if there's any kind of a bullish divergence on a higher time frame. Sorry, we from this good support we were bouncing, we got this nice parallel channel. We could have, see, this was a pretty sideways move, we didn't move up much, but the crossover on the downside never happened, right? So each time we were retesting to the 50 MA and getting a green candle, it is a good entry. Now what is that? I'll just mark few good entries now. Say we started forming this parallel channel from here. Now we were waiting for a retest to entry. This is a good candle to re-enter, right? And this was the day where it was a little choppy. And see, when you enter like this will be your stop loss in scalping. It's a small stop loss, but if any candle comes and even touches this line, just exit, because take small stop loss and we can always re-enter. But and the second entry was here, a good proper entry was here when this green candle. See, basically we need to break the 20 MA either on the upside or on the downside. We need to break the 20 MA on the downside when this type of parallel channel is being formed. So hope it was quite understandable until now. And I did show an example of the sideways move also, right? Now see, for example, over here is where our stop loss would have hit. No, stop loss. See here on this candle, after this candle, if we had entered, okay, after this candle, if we had entered this red candle, and the recent low, recent high are, if we had even kept target as 1.6, thinking we will come until there, we should have exited when we saw this type of a candle, like taking a trailing stop loss, right? After getting such type of a big candle, don't wait for a trade. See, maybe we will be cost to cost. Here we bought 33,300 put, and over here we were in a little bit of loss, just exited. Don't wait for, when we see such big candles breaking the 20 and the 50, we have to blindly exit. And then we could have gone long actually after getting this type of a nice, this was actually a beautiful entry to go long, where you're breaking the 20 and the 50 on the upside. And once this parallel channel started forming, right, we could have entered. See, on this day, as I mentioned about retest, even if you had entered over here, 33,000, say 300 call, always go in the money in this type of scalping in 1 minute. The recent swing high, swing low, this would have been a nice scalping target. Then we could have just trailed stop loss and actually got out over here. About 200 points we would have got. Why over here? Because the price closed below 20 MA, so we'll take that as a trailing stop loss. So these are the places where stop losses would have got hit. Here we would have thought, and hitting stop loss is something we cannot avoid. If the price doesn't move, that's why we use the word stop loss, right? We should not extend a loss. Now see, on this candle and the second candle, this type of parallel channel would have formed, so we would have thought this will continue, and say even after this candle, before a retest if we had entered, or after this retest if we had entered, in this candle we have to take stop loss and just get out. Now on this day, let me see how was the CPR. So this is how you can use the 20 and the 50 MA for scalping in 1 minute. It works beautifully, but it is a little risky. So people who are only see, it is just few minutes. Sometimes your target gets hit in. Now say for assume we have entered over here, your target gets hit in how many minutes candle? If we can check the bars. Now we are entering on this candle, okay, and your target is getting hit in, say 25 minutes. In 25 minutes or 2-3 minutes, even 5 minutes, your target will get hit. So you have to exit. You have to be pretty quick in what do you say, in your execution, buying and selling. And this trading should be done with a laptop and not on the mobile phone. Obviously, right? You see the kind of moves that you see, and we cannot take a very good judgment. You need to be in front of the PC, and that is how we can do scalping with this 1 minute time frame. Doing it on the mobile will not do any good. So with this logic, you can do some back testing. Let me just go over the entire thing once. The first thing is for the bearish setup. What is a bearish setup? Sorry for the handwriting. For the bearish setup, you have the 50 and you have the 20 MA. The 20 MA should cross 50 on the downside, and both 50 MA and 20 MA should start pointing down and form a parallel channel like this. Okay, and when this happens, and say this is the price action, the blue line. So when this happens, wait for the price action to retest the 20 MA and then take a short. And any candle that kind of breaks the 20 MA on the downside and the 20 MA is pointing down, this can be a good entry candle. And the same thing for the bullish move, that is, say you have the 50 MA, then you have the 20 MA crossing 50 MA on the upside, and the price action in such case, and even the 50 MA will be on pointing up, right? In such case, wait for a retest to the 20 MA. Sometimes you get a retest to the 50 MA, wait for a bullish candle, then wait for a candle to pierce the 20 MA on the upside, and then we can enter. Now, apart from everything, if you just see the crossover and the parallel channel, that itself, when you do back testing, you can see it, right? It's right there in front of you. When you have the parallel channel, it goes properly. When you have this type of up down, the market remains sideways. The same thing on the bullish side. When you have the parallel channel continuing, you have the bullish price action. When you have the parallel channel on the downside, you have the bearish price action. So that's why 1 minute we are using, because even the small moves we can capture scalping. See here, This was a beautiful scalp on the downside where a target would have hit. And another advice is, I've seen a lot of people whom I've taught this, try to enter and see in a day, even scalping, you might get many entries, but just try to restrict for 4 to 5 entries, not more than that. If somebody is trying to test this way of scalping, because I've seen people after teaching, they've taken like 30, 40 entries. This will, this is not, you won't have so many entries in a day. Maximum you will have is 2, 3 entries, the best entries. So try to capture that and hope it should be helpful. If you like this video, please hit the like button, and thank you for watching.